Okay, folks, welcome to Thursday Night Stock Charts Live. This is where we review the closing price action for the week. And it's truly where we begin our analysis for next week. We're thinking now, okay, this week is pretty much in the books. Where do we want to plant our flag next week? Long, short, neutral. So today gives us that glimpse. So also, before I forget, if you want to join our small account club, link below, get invited to our private live stream. We'll be going public with the live stream on Saturday, but in January, those will be private live streams. We're just building a list right now for those that are interested. Technical analysis. You want my 5-part video tutorial, my top 5 favorite candlestick patterns, link below. Free. Let's get to it. Let's say hello to folks and let's get started. Reminder, your email had me go to an old, really? The invite for this live stream? Hey, Sean. Thank you, Franklin. Thank you, Sean. All right, let's get started. All right, so today Walmart came out, and I guess their numbers were pretty bad because the anticipated market maker move. So let me just clarify. For this live stream right now, was the wrong link, Jeff? I'm not doubting you. I just want to make sure I understand what invite we're referring to, and that way I can focus on correcting it in the future. All right, so Walmart had a $4 market maker anticipated move. What does that mean? It means that the market makers bet that on earnings, Walmart would move about $4. It moved a heck of a lot more than that. So call option writers did very, very good. Call put sellers were annihilated, absolutely annihilated. My sound sounds like I'm in a tunnel. No, the email reminder that something. Yeah, but the invite for this live stream, right? The email, not the link. The link was wrong. It took you to the Veterans Day review. All right. The sound, not quite sure what I could do about that. Oh, I can do something about it. Hold on. It's on. Thank you, Paul. I want to fix that right now. Does that sound better? The invite was from. Oh, yeah. Now I remember. Yeah, no, I didn't change it. Yes. God damn it. Sorry about that, guys. Sorry. My apologies. Now I remember what I didn't do. Yes. I didn't change. I was wondering how I got through it so quickly. I didn't change the content area. Thank you. My apologies. I understand. Gotcha. All right. Good. Paul. Michael, thank you. Hi, Bob. UBS predicted rate cut. What do you think, GLBE? Let me get my handy dandy notebook out here. I have Wendy that gave me a bunch to do, which is awesome. We always want to provide value. Value. Okay, GLBE. Got it. All right. So Walmart annihilated today, but the market shrugged it off. So let's begin with this. Just proves that this guy's not in charge. Watch Blinken dies inside while Biden blunders through major geopolitical moment. So I'll come back to this one. I'm not going to play the whole thing. It's painful. Really, really painful. I want to pause here for a moment. Take a look at the eyes on these two. I think this is the National Defense Secretary. He's I can't. They're two buffoons. He's Secretary of State. So where is it? Hopefully they didn't take it down. Here. So you have President Xi from China in the country. They had a fairly good meeting, apparently. And this is what Biden says afterwards. Go.
Mr. President, after today, would you still refer to President Xi as a dictator? This is a term that you used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is the guy that runs the country.
This is a term that you used earlier this year.
Well, look, he is. I mean, he's a dictator in the sense that he is the guy that runs the.
So to show that this guy's not in charge, I'm just going to play a moment of this, not too much. You'll get the drift really, really quick. Now, for context, this is related to I believe the Chinese president's visit, but just listen to him.
Virtually every mass shooting, every circumstance where a large number of people have been victimized and lost, I've spoken to them. I learned a long time ago what you all learned in your life.
It's too painful to watch, and you can see that these are his puppet masters, just to keep him in check, to carry out the globalist orders that are coming down. Now, economic data for the week today was just abysmal, and the market, some had expected that the markets would tank on the news, and initially that is what happened. But remember that the markets believe that bad news is good news. Bad news is good news, as sick and perverse as that is. So today, let's just skip right to it. Today, we had industrial production plunge in October as auto manufacturers strike hits. Employment is sending signals of recession or normalization. We're going to talk about this a little bit more in a moment, because jobless claims today came out hotter than what was expected. So jobless claims are rising. People are losing their jobs. We did see a bit of deflation. Import price index declined. Philly Fed manufacturing survey came in less worse than what was expected. Industrial production cratered. Home builder confidence cratered. So the economic outlook is continuing to go south. And maybe wondering, why is the stock market going up? It's an anticipation of Federal Reserve rate cuts. The Fed is done. It's done. Unless, of course, we see a spike higher in CPI. For all intents and purposes, it's done. And how do we know that? It's simple. December, probability of a rate hike. This was 100% for December, now 97. For January, 93%, no rate hike. And you're seeing a rise in expectations for a rate cut. Yesterday, this was 0% probability of a rate cut. It is now 4%. Highly improbable, just about as probable as a rate hike. So we'll default to the probability of no rate hike being the path of least resistance for now that we believe the Federal Reserve is going to take. Now, things get interesting going out and into March. And remember, it's the holidays coming up. March is right around the corner. So the expectations for no rate hike in uh, March is only 65%. And the probability of an ease is now at nearly a third, roughly unchanged from yesterday. And actually, an anticipation of a half basis point rate cut by from yesterday to today is now on the table. Now, is it probable? No. But we're taking this observation because we know this is a widely viewed metric and traders trade off of it. If you see the probability of a rate hike go through the ceiling, well, the equity markets are going to take it on the chin. So watch this very, very carefully. And as we move out further, May, the probability of a rate cut rises as well. And ease in May is at 41.7. And as you go out to June, it's a little bit of jumping the shark going out that far. Trader Isaac. Hello. No Jody tonight. Yeah. Hopefully she'll catch us on the replay. All right. So the Schiller PE ratio is back above 30. And this has been the demarcation line, the line where usually the markets get into a little bit of trouble. Now, the price action today was interesting in that we sold off, but rallied back, light volume. We'll go over those charts in a moment. But there's a chart I'm going to go over in a few minutes that has me believing that like names like Microsoft, which is leading the Qs up higher, it's the largest component of the triple Qs. I think that we're getting very, very long in the tooth on Microsoft. And we may be looking to put on a short position there in the very near future. So PE ratio back above 30. The Federal Reserve continues to roll off debt off their balance sheet. This is as of yesterday, published today. And if you want a bigger view of where we're at relative to where we ballooned back in 2020, we've retraced about 25%. There's still a lot more to give back. So for all intents and purposes, this is tightening of the money supply. It's not the Federal Reserve buying our debt. It's foreign governments, institutions buying our debt. Yoga Mac, welcome. Yeah, good week today. We did industrial production. I don't have a lot to go over here. One thing to worry about, and keep this in mind as this PE ratio rises. This is published by Keith McCullough. And this is the put call ratio. Actually, no, I'm sorry, call volume. Call volume. And call volume is like at all-time highs. What did he write here? We're still not seeing any signs of tail hedging, while call volumes recently made new all-time highs. So this is a contrarian indicator. It's showing that there's a lot of speculation out there to the long side, probably rightly so in the very short term. But in the longer term, if this keeps up, a lot of people are going to get wiped out. Now, I want to spend a moment here. First, we'll go over this first, from Keith McCullough. Both yields and oil started pricing in U.S. recession alongside the growth slowing data in October. Oil down another spot, 3% this morning. Remains bearish trend, and he is absolutely correct. Oil is very, very weak. And you may be saying, well, if they're going to cut rates, shouldn't that mean that oil should go up? Let's take a look. So here's the yield curve. And what I've added here in black is oil as let me update this, as the yield curve steepens historically. 2000, 2007, 2019, and we are here, whatever you want to call this bubble. And in the past, what happens is that as we begin to steepen on oil, oil peaks out and begins to roll over. And I talk about the steepening of the yield curve. I talk about correlations or inverse correlations like the S&P 500 rolling over, gold rallying, but I don't spend a lot of time speaking about what oil does during these time frames. So as the steepening begins, oil takes it on the chin. Remember, back here in 20, oil went negative. You couldn't, it was basically free. Oil went negative. So after the Federal Reserve begins to cut rates, oil then begins to rally. Why? It's because when the Federal Reserve cuts rates, it stimulates growth in the economy. It also drops the dollar. The dollar declines in value. What is oil priced in? You guessed it, the US dollar. So when the dollar declines and free money begins to hit the markets again and the economy begins to boom, well, you need more oil, and oil becomes more expensive in dollar terms. So you saw that in 2000. You saw it here in 2006. Oil peaked, pulled back, steepening of the yield curve, pulled back a little bit, and then it ripped through the ceiling as the Federal Reserve began to cut rates. Fast forward to 2019. We peaked out in April of 2019 as the yield curve began to steepen, and as the recession hit, oil went negative and then went parabolic. So this is what you're seeing right now. This is all this is a repeat. It's a repeat of 2000, 2006, 2007, and 2020. It's the same nonsense. And they have no other choice. They're heading into an election year. Powell is going to get the phone call because the Democrats are in the polling. They versus Trump, they are roadkill. And that's without a recession. That's just right here, right now. If we start rolling over economically even worse than what we are right now, you could bet your bottom dollar they are going to be hammering Powell to cut rates. And he's going to do it. So we kind of went over this. Again, this is another indicator that the put-call ratio is down at levels not seen since last July. Now, what's important to remember, and we'll talk about this in a couple of minutes when we go over the weekly charts, what happened to equities back in July? Well, they went like this, right? So right now, there's a lot of speculation in the equity markets. This usually gets resolved very brutally to the downside. So if you're putting on a lot of net longs right now, just be careful. Use a tight stop. I believe that we are going to go up higher, but that doesn't mean that we can't get corrections now and then. November, we're on track for a great month. It's seasonally the best month out of the year. December, not so much. So perhaps we'll see a little bit of volatility as we go into December. So names that I'm looking at as a potential short, Microsoft. And take a look at your stochastics. They are very, very extended. I think it's probably going to break out here. I don't think it's time to short it quite yet. But Microsoft, they had a lot of volatility here today. How was volume? It was good. How did it close on the day? Good close. Microsoft's going to continue up higher here. So I actually have a strangle on Microsoft, and my strike is only about $10 away from where we're trading right now. So clearly I'm going to have to defend that position tomorrow by probably selling more puts, rolling up the untested side, and selling more puts as well. So I'm not worried about it. It's been a good week. Right now, we haven't done much all this week. It's been a really good theta decay week. For those not familiar with what that means, since we sell options and the expiration dates are now within the 30-day window, the time decay just really ramps up. So we're making our goal of what we expect to make every single day. So we're very satisfied. Not a lot of new trades this week. I'm waiting for setups, and I don't have them yet unless I want to get long. And I'm a little bit nervous about doing that. Now, what I am thinking about getting long of, if you can believe it, ARK. Why? When you take a look at ARK relative to the S&P 500, this is a ratio chart. Again, ARK performance-wise versus the SPY. The S&P 500 has been underperforming the ARK funds for the past few weeks. And when you do a deeper dive, you take a look at a daily view. Look at this. Talk about outperformance. So ARK is beginning to outperform the S&P 500. So are we seeing sector rotation out of the large caps, which have done very, very well, and into the highly speculative, highly shorted ARK names? Let's see how we're doing versus the Qs. Because even the Qs have slowed down some. Yeah, ARK has been outperforming the Qs. So I'm not saying run out and buy ARK with reckless abandon. Just be aware that this is a trade that's setting up and that we're probably going to be a part of it. Looks like we're down today. Yeah, so I may be a seller of puts on ARK in anticipation of a rip your face off rally into these rate cuts. And then it's after the rate cuts. You need to buckle up. I'll be short of the market by that first rate cut. Not a lot. Oh, this is the wrong symbol. ARKK. Not a lot of implied volatility, but I want the shares. ARK loves convergence narrative. Remember their model started in 2020 and was set 4 to 5 years out. All that rogue. Yeah, and one of the largest components is Tesla, and that really got hammered today. That's probably why ARK was down. Oil will be fine this time as China will take delivery as $72 is cheaper than Russian. Okay. I have nat gas too, but I've been not doing well with it. And I have options, but they go out over a year. So I'm going to take a look. Let's quickly take a look at nat gas here, because I got to decide whether to bail on this trade or to add more. Ugh, not looking good. Not looking good here. All right, one trading day left to go here. Not looking good on nat gas. So I may have to put my tail between my legs and close that out. All right. Let's take a look at the, oh, and by the way, yes, Yoga Mac, thank you. Smash like, push the button. Love the emoji. All right. I think that's why I was here. I think that's very intuitive of you. I think that you're right, because he needs to stimulate that economy. And the only way to do that is to get the U.S. consumer on board. And I mean, a lot of companies are leaving China. Okay. Chevron, yeah. Thank God I got out of that one. Amazon, I'm surprised about. I like that chart. AMZM. Oh, look good. We're not down on the week. Excuse me. What do we do today? I think this could be a buy entry point. You know, we closed down on the day, but we rallied off the lows. I think that this could be nibbled on. Let's take a look at the quality of the close, 30-minute view. I wouldn't buy it now in the after hours session. I would probably wait until tomorrow morning and see whether or not we can hold any gains. And then if we close strong, I would look to open up a position here on Amazon. Excuse me. All right, let's go over the weekly charts. I don't have a big agenda here tonight. All right, yields. So this is the approximate reason as to why the equity markets can continue to rally. Borrowing costs are going down. On a daily view, it looks as though we are going to press lower here on yields. TLT, 20-year bond ETF, weekly breakout, very strong price action. Let's go to a daily view. There's still more room to run here on the TLT. Good volume. So I think that yields are going to continue lower, bond prices higher, Treasury inflation protected securities. I went over this with members the other day, and you know, tip buyers are usually institutions, wealthy investors, and they're buying up tips in anticipation of these rate cuts, because ultimately these rate cuts that are coming in a few months are going to be inflationary, right? So we're going to see about a possible deflation or disinflation in a little while. It's not going to last long, but ultimately when they cut those rates, these tips are going to take off like a rocket ship. Look at what they did back in 20. So we have a W formation forming here. I mean, these are looking really, really good as a long if you're into tips. I'm not into tips. The dollar weekly chart crushed. Another reason why equities could rally. But why is the dollar weakening up? It's because the currency traders know what's coming. What's coming is there's going to be rate cuts. No more interest rate hikes. Inflation is still going to be eating away. The Federal Reserve is going to lie about it. Politicians are going to lie about it. Shrinkflation is for real. Prices are going to continue up higher. The only reprieve that we're going to get could be in the energy front, or probably will be on the energy front, but food prices appear to be heading back up. We're going to go over that chart in a moment. So the dollar weakening, and this is good for the gold mining plays. Dollar bullish reversal bar today, though, holding support, but bearish weak. How's the yen doing? Or euro? Big move up higher here on the euro. Very light volume, though. Yen, still a hot mess, but up on the week. Volatility. The volatility is up on the week, if you could believe it. We're off the highs. Daily view. Bullish key reversal bar on the VIX today. One of my top 5 favorite candlestick patterns. Link below. 5-part video tutorial. Free. So what we're going to be looking out for here is a breakout. There she is. There she is. We were worried sick. We were worried sick. Good to have you here, Jody. So what we're looking for here on volatility is a breakout, and I think we're going to get it. So in a way, I'm kind of speaking out the both side of my mouth here, because I'm saying that I believe that we're going to, I believe that we're going to head up higher. But in this very short term, it looks as though um, we're setting up for some potential volatility here. Bullish reversal bar on VIX. We have the Qs that are extended. We have the put call ratio pretty extended to the downside, and very, very high, historically high call option volume. All that, you throw that into a mix, and that kind of spells a little bit of short-term trouble for the equity markets. So I think that we may finish off November fairly strong as you proceed into December early on. I think that we may see some trembling in the market, some correction in the market. But as the new year approaches, and especially Christmas week, they're gonna put the computers on, and it's gonna be very, very quiet. They're gonna guide the market up higher as they do every year, absent geopolitical event. So they may rally it back in the back half of December. I'm worried about the first couple of weeks of December, though. The Dow transports, not looking good here. Yes, an up week, but all up weeks are not made equal. We are well off the highs, sellers above. That's all it is. Wick, shadow, topping tail, call it cupcakes. It doesn't matter. That wick is telling you, listen, sellers above, overhead supply. Dow Jones Industrial Average, weekly view. Good looking chart here. Good looking chart. And I got to say, I think that we're probably going to break out of this very, very long-term base. And the longer the consolidation, the greater the validation of any breakout. And we have a multi-year consolidation on the Dow Jones Industrial Average. So I look at this chart and I can spout to you all the reasons in the world why the market should go down. It doesn't matter. Not until the crisis happens. We don't have the crises yet. The bond market is not saying the crisis is here yet. They're saying March in all probability. That could get pushed forward. They'll decide. Always pay attention to the bond market. We take a look at the Fed Watch tool. We know when the crisis is going to hit. We watch that. We watch the tips. We watch for gold. We watch for these names, and they'll tell us when the trouble is on the horizon. But right now, the path of least resistance for the Dow Jones, which does have critical resistance immediately above, is apparently to the upside. Daily view. We closed down today, perhaps consolidation, digesting these gains. We have a bunch of gaps that need to get filled here. Volume pretty heavy. SPY weekly view. Talk about timing. Yoga Mac, right on the time, man. This is a huge breakout on the S&P 500. You know, it was this Thursday last week, I had a speculative short position on, and I was up on that trade by only $200, but I was up on the trade. And then that Friday rip, when I had my portfolio was up big. That Friday was that the shorts turned into losses. I bailed on them, and I had given up. I barely closed out the week last week positive. So what a difference a week makes. It's a good week so far. Not a lot of trading per se, but a lot of time decay working well. So let's throw up some resistance levels here. And this is what we're looking at. 470 is the line in the sand. We close above that mark. Look out above. But that doesn't mean we can't get a few days, couple of weeks of a downside move. Daily chart, bullish key reversal bar. I think that we need to fill this gap here. So we have a bullish key reversal bar, which is bullish for the S&P 500, but we also have a little bit of a problem with volatility. VIX also flashed a bullish key reversal bar. That's not supposed to happen. So somebody was in there buying insurance, Qs, weekly view. Same thing. Where's stone's throw away from multi-year highs and all-time highs? I think it's a foregone conclusion. Daily chart. A bullish reversal bar day on very, very thin volume. How do we close out the session? 15-minute chart. Pretty good. It looks like they're going to pop this up higher going into tomorrow. So if they open the markets or the futures markets down, I would not go leaning into the short side. Come on. Okay. It won't load my symbols. All right. NQ. It's currently trading down. That's the NASDAQ 100. They may open it down. I don't think it stays down. I think that this is a pretty solid base that's gotten built. I think they're going to move it up higher tomorrow. XLK weekly view. The XLK, wow. XLK this week put in new all-time highs. Wow. Semis. Michael Burry says he has a short position now on the semis. I think he's going to get whacked. I think this is going up higher. Weekly breakout. We're very close to, in fact, we put in new highs today. New all-time highs today. So 161.81. Prior high 161.17. There's no overhead supply above. So I call it clear blue skies. No overhead supply. So this is one of the values of TrendSpider. Let's see if they can extrapolate out where there might be resistance. What the hell's going on with my laptop here? SMH. Let's go to a weekly view. Okay. Trend lines are drawn. So the algorithm is picking off on the SMH that we're going to have some resistance at 163.27. So new all-time highs on the semiconductor sector. Watch out for resistance immediately above 163.27. This is the power of AI. TrendSpider is having a major discount. Do not use my discount code. They're doing an 82% Black Friday sale. I don't know how much lower they can go. So use the link below and get on board with TrendSpider, please. Because that's not going to last. I'm telling you right now, it's not going to last. All right, so that's the semis. Let's go back, finish off the weekly view. LABU, of which I own. Not a great week. It's up, 14.25%, but not a great week. Daily view. This is going to split soon. Consumer staples met some resistance this week. discretionary names, some resistance at 170. Let's see what I want to check in with Walmart. Utter annihilation. Incredible. What's the IV rank here? I need to start putting on new trades for late December, January. The IV crush has already happened. All right, no trade there. All right, emerging markets. Rallying. That weak US dollar is going to benefit it really well. Pulled back today, but emerging markets firming up. Energy, avoid it. This is broken. Down over 0.5%, while equities are up. Daily view, another gap down. This is a dead cat bounce. Avoid. Oil, we've already spoken about this. The trend is clear, it's defined. And if we close down below 63.50 a barrel, this goes into free fall yet again, circa, I'm not saying it's going to go negative because they closed down the globe. So that's why I went negative. I don't think they're going to do that again this time, but you never know. But oil in a lot of trouble. Gasoline prices, great for the consumer coming in. Look at the head and shoulders setup here. Left shoulder, head, right shoulder, neckline. It's a 45-degree neckline. Has it been broken? Let's validate. Not yet, but we are very, very close. Oh, we did. No, we've broken the neckline here. Marginally. But it's broken. So this, it took a long while to break, and we identified this 6 months ago, and now finally, about 6 months ago, finally rolling over. Gold. Bullish key reversal bar. Love this setup. We are long of gold, both physical and long of call contracts on GLD. So we have a flag setup, a very, very bullish move. And just to give you a glimpse of what it looks like on a monthly chart, we're currently down on the month, but we are right at clear resistance. And I think I've said this before, that this time around, I don't think it's going to be a tiptoe through resistance. I think it's just going to explode up 50, 60 bucks a few days in a row. And it's going to leave this most recent all-time high from March of 22 in the dust in a heartbeat. So buckle up here. And I need to be adding more here. Let's see how it closed on the day. Yeah. Very, very nice price action. So we want to build, because we're using a call spread. That means that we're buying deep in the money call options, but simultaneously selling a deep out of the money contract call option going out over a year on these. So it looks like we're going to be adding more. Hopefully we get a retest tomorrow of 1980, and we'll look to add more there. GDXJ, we recently added more to our long-term portfolio. We're up on the week over 5.5%. NUGT, which we have a strangle on right now. We are up on the week. This is a daily chart, sorry. On the week, 9.5%. And today, up 2.5%. So I think I need to start selling more puts here, and that's a bullish bet. Now, we also, the other day, began adding more to our silver trade weekly view. And look at this mother of all outside reversal bars, or a bullish engulfing, one of my top 5 favorite candlestick patterns. Getting ready for a breakout here. We're going to be looking to add more here very, very soon on a weekly breakout. Daily view, silver. Again, I'm going to try that again. I'm going to try that again. Daily view, silver. Yeah, look at this. We're probably going to get a pullback here, filling of the gap. On that filling of the gap, we're probably going to be adding more to AGQ. I like it. How's volume? Good volume. All right, let's close it out with some chart requests. Boyle, can you do Boyle if you get a chance? I sold 40 puts at 40 expiring December 15th. Will it go below? Let's bring it up. I sold some puts there as well. I don't know if it's the 40 strike. I forget which. Can it? Of course it can. That's why those options have any type of value. The probability is out there. You said you got the December 15s. Let's do let's take a look at it from an analytical perspective through the lens of probabilities. All right. So using a 1 standard deviation, December the 15th, there is a 35% probability that those shares will trade below $40 per share come December the 15th. So is it possible? Yes. It's not the best odds, but still the odds are in your favor that they won't trade down below and close below that $40 mark. So I'm not going to move my position. I may take, if we continue to weaken up here and the shares continue to weaken up, I'll keep the puts on. But what I may do is sell some calls to offset the weakness in Boyle. I just haven't wanted to sell calls on Boyle into weakness, because usually once you sell calls into weakness, the shares rally. It happens. It's just irony. That's just the way it works. So I've been hoping for a nice pop up higher like we had the other day, and then we could sell calls. So that's one consideration that you may want to take. Let's take a look at how we closed out the day. Might we get a pop tomorrow? Now, the 4-hour chart this morning on natural gas was looking really good. I think they're going to pop it, Sean. It was a horrible morning, but the afternoon, no continuation breakdown. It just consolidated inside that 4-hour candlestick. So I think that they may spike it up higher. So what you may want to do is keep an eye on any rally and consider selling an out-of-the-money call option to offset that those puts that you sold at the 40 strike. And that way you're hedged. All right, so we got AMD. And Sean, let me know if I didn't answer your question or if you have any more questions, and I will answer it. And not just tonight, anytime. AGI for Trader Isaac. Trader Isaac was worried about you, Jody. All right. Now I have to go and take a look at this. Talon cooking. The man, the mission. Nice. Looks nice and fresh. Smoked brisket. Oh, I love that. God darn. M. Rum. SOX. I'll go over the SOXL because it's just whatever I say about the XOSL is just going to be the inverse for the SOXS. So there's really no need to go over both of them. So let's get started. So we'll kick it off with the SOXL. I mean, it's going to look the same here as the semis do. So this is the Direxion Semiconductor Bull ETF. Note the time decay here. And this is not my favorite instrument. You have the semis that are at all-time highs, yet the SOXL is nowhere near all-time highs. So just be careful. You know, we're a good distance away from taking out all-time highs. It will eventually, but this is the problem with these leveraged ETFs. They have that time decay with them. So I think it's a buy. I think it's going to play catch up. We broke out of the downtrend. That's in the rearview mirror. Path of least resistance is up. First stop is going to be 25.21. Next stop 26.47. After that, $28 a share. So SOXL looking pretty good. Daily view. Did some consolidation today. A bit of support down here at 21.71. If you're going to pull back to that mark, down volume was light and declined versus yesterday's down volume. That is bullish. So bullish SOXL. GLBE. Global online payments. Wow. Disaster area. I wouldn't be a buyer here. I mean, the only bullish thing I could say about this stock is that we saw a reversal bar today, and we're probably going to rally here. So if you want to swing trade it up to between 33 and $34 a share, I think that's the only trade here. After that, it's probably a short. I don't like it. I like it for a quick swing trade, but this there's a lot of technical damage done here, and that does not get fixed overnight. AMD. All right, so AMD weekly view is at the precipice of a breakout, but it's got a lot of resistance above. We are not at all-time highs, so it's lagging the SMH. Would I be a buyer here? I would stay small, but yeah, I would probably buy these shares. But you're going to have a lot of resistance up at around 132 per share, and even at this resistance level here at 124. Daily view. I think you're breaking out. I think this is going to break out. So bullish AMD, but it does have resistance above. AGI, Alamos Gold. Let's go to a monthly view here. Very nice. We are at the precipice of a breakout. You want to argue that we've broken out? Sure, you can do that by drawing your line down to the top of the bodies. I like to use the wick, not the body. The high, that's the closing price of the month. I like to use the high as my breakout point. So this is, in my mind, is not broken out yet. To some, it has broken out. That may put some momentum behind it. I'd be a buyer on a close above 13.25 per share. Weekly view. Good price action, but you do have a breakout point failure, meaning we broke out a couple of weeks ago, then failed to hold it. Now they're trying to break out yet again. So I would not be a buyer until we got this breakout above 13.25. Again, daily view, struggling here. It's struggling. Yesterday was a brutal session. 13.25 is your number. It's got to close above that mark. That makes it interesting. Until then, it's just a watch at best. I got you, Franklin. Welcome back. When on the video earnings next week, I believe, right? So AGI, interesting. Again, 13.25. Let's bring it up. NVIDIA, looking good here, man. I mean, we'll come back to the daily chart, but wow. Weekly chart looking really good here. Look at this Bollinger Band setup. The Bollinger Bands in black are trading within the Keltner channels. This is a major, major setup for a breakout on NVIDIA. Yeah. Yeah. Why is Walmart up here? Here's NVIDIA. Yeah, this is a buy all day long. This is going up higher. And when you take a look at the daily chart here, this is a very, very nice setup. A bullish key reversal bar on the day. And there is not much in terms of overhead supply above. So I think that this is probably going to take off like a rocket ship. So NVIDIA, bullish. I would not own it into earnings, but bullish nonetheless. Macy's. Wow, look at Macy's. That's nice to see. I like the malls. I like going shopping. All right, so let's face it, it's roadkill. But it's up 2 months in a row so far. You got to feel nostalgic for Macy's. Miracle on 34th Street. I know we're not supposed to talk about Christmas. Can't talk about God anymore. Can't talk about holiday movies, Christmas movies. God forbid you say it's a Christmas movie. Oh, you're the devil. Oh, you're a racist. I like Christmas movies. I like Christmas. I like Macy's. Damn it. Family-friendly show. Sorry about that. So Macy's, it's up on the week, potentially closing above a couple of moving averages. I think this is the 20 period. So it's looking okay. Nice little breakout here on a daily time frame. The problem is that sellers moved in. There's a ton of overhead supply above. It's not for me. If it had a big dividend, I would be interested in it. I don't know what the dividend is, but I doubt it has a fat one. So I would pass. Rumble. Weekly view. I want to buy Rumble. I think that I saw this clip today from the Salty Army. And it was about how YouTube is requesting people turn in other users for talking poorly about the new Disney movie, The Marvels, I think it is, that bombed. Horrible. Another dumpster fire of a movie. I guess somebody report me to YouTube so they can take this video down. They want to know who's bad mouthing the movie so that they could block them and do whatever. This is just going to be the death knell. It's the worst business model in the world. It's such a great product. I love YouTube. I really, really do. But their management is just so woke. It's ridiculous. And people are leaving. I'm seeing Rumble being used as a more and more of a platform nowadays for debating. And they have a lot of good content on there because YouTube has banned so many interesting people. They ban interesting people. And I guess that's why I'm not going to say what I'm going to say because that would be kind of cocky of me. I don't want to be cocky. But back to the chart here. I like this chart. Did they report? I believe they reported this week, no? When is their earnings? Is that today? I guess their earnings were today. Yeah. Q3 revenue surges on higher advertising. Good for them. Good for them. YouTube, get your act together. Competition. Okay, so Rumble, I like here. I may even buy some myself as a long-term spec. Hopefully, there's a lot of short interest here. So Rumble, I'd be a buyer. Talon, I shared your brisket, your pot of brisket with everybody. Everybody on this live stream saw it today. Looks really good. On 11/13. Was that for Rumble? I think they reported today, no? Oh, no, you're right. 11/13. That's what the date said on that feed. Yes. I'm in some tech startups, and we have to do research. The competitive landscape of machine learning and AI. Nobody touches NVIDIA's hardware manufacturing and distribution like them. Grace Hopper 200. Thank you, Yoga Mac. Thank you. No threat, you think, from AMD and Intel? Be safe out there. All right, so that's Rumble. So I'm a buyer of Rumble shares on spec. What else we want to go over here? Last one up I have is URA. URA is a monster. This is a monthly chart here. This is a screaming buy. I think it goes up higher. Weekly chart, breakout. It's a buy all day long. We do have resistance immediately above here. So just be forewarned, perhaps we'll get a pullback. I would be a buyer of the pullback. Uranium is going up higher. With that, folks, thank you for being here. Don't forget, like, subscribe. We have the small account club. Link below if you want the invite for Saturday's live stream down below. And we're going to be meeting on Sunday night. So like, subscribe, and hit the notification bell so you know when we go live on Sunday night. Thank you, Sean. Appreciate that very much. Everybody have a really great Friday and an awesome weekend. And may your day be profitable. Take care. Oh, hold on. No, Yoga Mac. I'm not even close. NVIDIA is also building Omniverse. Check out 3 miracles of the future. They will not only be in the metaverse, but their equipment will drive Web3 and blockchain. Wow. All right. Thanks, Yoga Mac. You're welcome, pal. It's not Jim Cramer, but I like the video from the You're welcome, Pete. Jody, you're welcome. Have an awesome night. I'll talk to you tomorrow. Be well.